Hello, everybody. Ben Hart here. It is 1:01 on Thursday, March 26th. Just back from some time off last week. Enjoyed a little bit of break and sunshine. And so I'm looking forward to giving you an update, seeing what's going on. Lots continues to happen in the world. I'll be by myself today as well. So I'll jump into a summary of what I see going on, what I've seen happen, and give you some charts and some thoughts around what's going on. And give you as best an update as I can around what's going on in this world. So thanks so much for joining me. My focus and main view these days have been around what's going on in the geopolitics. And so obviously through every cycle and event that we go through, we're always left with a different view around what to do, how to prepare, what should we do as the world looks forward. I've been through a number of cycles now with each one being a little bit different. And this one presently is massively geopolitical. So what's happening in the Middle East right now is primary focus of what's happening in the commodities market. When there is a stress in the commodities market, that rolls over into potentially higher costs. So inflation to worry about and how that trickles down to you as the investor and as the individual that owns assets or is borrowing to buy assets. These factors play into the thinking around what you should do and how you should prepare. So if this all trickles down, what we're seeing now is the potential for higher inflation in certain areas. But at the same time, on the other hand, we have the economy slowing. And so we've had the economy slowing globally now for a couple of quarters. And you get a backdrop, which many people will talk about, and everyone likes to have a different tagline, but you get generally a stagflationary environment. And all that means is growth is slowing and inflation's accelerating. And that's a pretty terrible environment for central planners because they have to make a difficult decision around what is their bigger priority is keeping inflation in check or keeping full employment. And so that's, I think, a bit of a struggle with what the central banks of the world and central planners of the world are dealing with. So um, I'd say that is the big picture piece around what we're doing and thinking about right now. So I will jump into some of the slides. We'll go through that. I'll give you some further comments as we get closer to the end of this. And as always, happy to talk. And a lot of what we're spending our time with for you as the client is getting prepared for tax season. And if there's something that we can help you with on that side of things, certainly please do let us know as well. All right. Okay. So as I said, we are recording this on Thursday, March 26th around 1 p.m. So if anything happens between now and next Thursday, I'll comment on next Thursday. But right now, market's pretty muted. Started the day negative and bouncing around certain areas are up on the positive side of things. Energy has been that key piece that's been extremely volatile. So we got both natural gas, Brent and WTI all higher today, heating oil as well, all higher today. And so that's been driven really politically based on what Trump and Iran are saying versus each other. And so that's going to certainly be violent and fluctuate. But let's jump into the slides. As always, the opinions expressed do not necessarily reflect those of National Bank Financial, so anything I say today may not directly relate to you. And if you have questions, everyone's risk tolerance is different. Certainly feel free to give me a call and speak with Eva or myself or your advisor, and they can address some of these things if they apply to you. For those that have listened and get to know me over the years, sentiment is a real interesting gauge and driver for the thinking for me. And so I look at lots of different areas. Certainly, the easiest one to look at is the Fear and Greed Index, and CNN covers that one and actually provides quite good data set around sentiment. You can look at put call ratios and volatility and all the different various indicators that can play a part in your thinking around sentiment. And as I've said in the past, extreme pessimism is typically a buy signal, and extreme optimism is typically a sell signal. So as we look at these various inputs, this is a bit of a longer termish chart. So 2018 was the start of this one, which was, if we look here, these would have been a sell signal. If we look here, bottom of the market would have been a buy signal. another buy signal as we hit these different various levels. And I looked back at our video from 1 year ago just to get a sense of what was going on, but we were in the middle of tariff tantrum, just starting at end of March into April. And if you look back here, just from a thinking perspective, this was what we saw, which was that this tariffs came out. If you all remember that tariff board, all these countries were getting charged a tax. And we had a market correction into backdrop. Right now, what we're seeing was we've had a couple of events, but right now we're seeing this off of the back of a concern around what's happening with the war going on in Iran and the US and the rest of the Middle East. So this has been a risk-off event, and I've had numerous conversations with clients around the conversation around why is the market correcting, what's going on, and also why is the US dollar going up in this backdrop. And for those of you that have been invested in the markets long enough, you know that markets, and I say markets, which is commodities, stocks, bonds, ETFs, the markets themselves are leveraged. And what number you want to say that they're leveraged, my gauge is probably 10, 20, 30 to 1. So when you have a crisis or event that we're going through right now, you have liquidity issues. And so as that leverage needs to come down, people need to sell assets, and they're selling, in a lot of cases, they're selling the winners. So you've seen gold and tech and some of these areas that have been winners for a long time be sold as money's had to be repatriated to US dollars to reduce the risk down in institutional investment portfolios. So you're having that environment going on, and that creates a destabilizing effect on markets. And so that also has a psychological impact for people. And so we're now in this gauge of 18 on the scale. This is pretty good for if you're using it as a counter trend. This is where we were last week. This is where we are this week. And so momentum, quite red. Volatility, also quite red. If you look, volatility got a little bit better in the past week. Breadth, that's the number of stocks that are going up or down together, quite weak. Risk appetite, also quite weak. Speculative buying, okay, that's an interesting piece. So you start to see speculation come back into the markets, and that would generally be more on the institutional side. So you're seeing that tick up a little bit week over week, and surveys in also in the quite red. So that's how people are feeling, like the survey sentiment readings. So it's a great chart, great gauge. This is more of a buy signal for me than a sell. So this is something that gives me a bit more confidence around looking at maybe there's some areas that are overdone that we could look to add to or make some switches into. So that's how I would view that one. This other piece is the speculative positioning non-commercial CFTC. So this is the futures and options exchange. And this is how people are speculating. So back to the previous page around where this is happening, and are there any outliers that grab my attention? And I think the answer is yes, of course, there always is. And so this particular one on the bond side of things has always been a place that I thought has maybe been a little bit overdone. And if you look at the 2 to 5 year, you get pretty heavy short positioning on the 2 and the 5 year bond. And so that's the view that interest rates are going to go up, continue to go up, which would mean if you're short, you're making money because you're betting on the fact that prices are going to go down, and yields are going to go up. And so if we get the inverse, I think you could see a pretty material surprise, which is yields fall in that backdrop, and that would be a different environment than it's currently priced in. And if we look down further down the chain here, we look at positioning in gold, copper, oil. Oil's an interesting one. So not huge speculative positioning to the long side there. And then on the other areas, agriculture continues to be showing a negative Z-score. So that's interesting as well, where I'd say, why is that the case? So something that I've looked at is there's an ETF called COW, that gives you exposure to ag. That's an interesting way to potentially play that space if you're of the view that this is overdone to the downside. And then from a perspective of markets, and so we'll say stock markets just to keep everything high level and simple. But I think this is a great layout. This comes out from our CIO team. They do a great job on a data set perspective to give us a sense of what's going on. So great charts here. And I've broken this down over four different areas. So this is the TSX. Which is the Canadian stock market. This is the S&P 500, which is the top 500 companies in the US. This is Morgan Stanley Capital Index, EFI, which is Europe, Asia, and the Far East. And this is the Emerging Markets Index. And so you can look at all of these in multiple ways. I look at them from a perspective of what's the chart saying. If you're a technician, there's a number of things that you're going to be looking at here. On the TSX perspective, this is the 200-day moving average, this dotted line right here. And so if you're a chartist, you're going to say something like, okay, this is probably the floor of what I've been looking at for where the support hopefully comes in for the TSX. And so that's around 30,500 or so. And so we are above that level presently. The S&P 500, from a technical perspective, this looks not good because it's broken down through the 200-day, and so the market has dropped below the 200-day moving average. That typically means there's not a lot of support. The other thing I think that the other technicians will be watching is this dotted line here. That's the 50. So if the 50 goes down through the 200-day, that's really bad for a technician. That means that you're going to get negative divergence, and this is probably heading lower before it finds a new floor. And so this is certainly a different picture than Canada versus the US. And if we look at EFI, EFI is quite a bit more similar to Canada, except for a little bit closer to their support levels. And so again, you'd be watching that if you think this is an opportune time. If we do bounce off that level, that's probably a good technical signal. The one that flagged me for the more so was the emerging markets. And so we saw that initial correction into the fear of what's happening in the Middle East conflict. And then we've seen consolidation. And so if we consolidate here sideways, that's quite a positive signal. We get a consolidation, and if your view is there is a resolution, resolution likely results in a weaker US dollar. A weaker US dollar likely results in positive for emerging markets. And so depending what your view and starting point is, this is a reasonable signal where I'd look at this and say, okay, it's consolidating much higher than the moving averages. Maybe there's some positive things here. If you believe in emerging markets, maybe it's a good opportune time to add to positions. And on the technical levels, S&P and EFI look better from a support perspective. As I said before, the opinions expressed do not necessarily reflect those in National Bank Financial. Bear these in my best judgment. Everyone's risk tolerance is different, independent. If you have questions, please reach out to Eva or I, and we're happy to discuss and or address them as they fit for you. All right. So as we look and wrap this up and we head towards thinking around what's going on next week, we're coming into the end of the first quarter, so end of March. March has been a much more difficult equity markets, bond markets than we saw in January and February. We continue to have lots of conversations around AI and technology and those potential impacts on the industries and sectors, and we'll continue to cover those more as we go. But really, the focus has been energy and the Middle East, geopolitical issues right now, short term, and so continue to track and follow what's happening there. I think we're starting to get closer and closer to a bit of a apex around what the forward path looks like for the US and Iran. But right now, in the meantime, there's a lot of chop going on in the markets. Clients have asked me what to pay attention to. I continue to say pay attention to volatility, and that would be volatility across all asset classes, stock market, bonds, gold, commodities. That'd be a reasonable place to look and see what that feeling is like. But from a sentiment perspective, as I mentioned earlier, if there's companies that you liked in the last couple of years that are down materially from their highs, that you think have reasonable price earnings multiples, that you think have reasonable opportunities, this could be a time to look at saying maybe I tilt and reallocate some money to those areas. If I've had some cash on the sidelines. we've seen a pretty material correction. I see lots of stocks that are down, 20, 25% from their highs that might still be good companies that have been thrown out with this fear that everything's going to go out of control right now. So next week we'll be looking to end of the month, Tuesday, March 31st. Then we're heading towards April. Lots of talk around interest rates, central banks, what's going on. Are they going to cut? Are they going to raise? We'll address and discuss that in a bit more detail next week. But thanks so much for joining me today. I appreciate you listening, watching. Any questions, feel free to reach out to us and or subscribe to our YouTube channel. Thanks so much. Have a great day, everybody.